And now, let's get right to Caleb Silver, editor-in-chief of Investopedia, who has the hottest stocks of the last decade and century. Now, you really want to know that. It's great to see you.
Good to be here.
Happy 2020.
To you too.
So, when you're compiling this list, I know, before I get to the names, are there surprises? Are you, what are you thinking when you're looking at these?
What's surprising is how much the industries have changed and leadership has changed decade to decade just over the past 20 years. A lot's happened, obviously, in the past decade, goes without saying. But if you look at the top stocks in the past decade, and then if you look at the top stocks from 2000 to 2009, we're looking at a completely different picture. It's fascinating.
Yeah, it is. As a matter of fact, I wanted to go to my notes that I had the other day because you make a great point. You know, when we talk about going into now the 20s, the roaring 20s of our decade, right? Everybody was talking about AI, robo, tissue engineering, just so many different things that weren't around the last 10, 15 years. So,
smartphone was a 2009 thing. Imagine life without it now. So.
Right. I mean, when I was in college, I don't even think we had the internet. So, all right. So let's get to it. We have the best of the decade.
Right. So Netflix is in the top spot, and Netflix has been an unbelievable stock, but it's been a fascinating story, and it's been a stock that you really need a strong stomach if you've been a long-time holder of it, right? It fell 70% in its first year. It's had 18 drawdowns of 20% or more. And Netflix has been resilient, and it's done a lot of it with debt. It's done a lot of it with shareholders funding its growth. It launches a new series. It spends $15 billion on content, but it does a lot of that through debt and a lot of that through being a public company.
I can't get over some of those percentages, over 3,000% gain.
Right, but you would have had to hold strong. It had a massive split in the early days. In 2015, it had a 7-to-1 split. So the stock obviously has multiplied, geometrically, but it has not been an easy ride, though it's been very rewarding for longtime shareholders. When we start to look down the list, there's some names that I had to look up because I had never heard of them before. Market Access Holdings. Have you ever heard of this?
Yeah, isn't Market Access?
It's a fixed income trading platform. It's massive. It's used by institutions around the world.
My friend's father used to work there, so that's why I know that.
But it's a massive company, and it's been an incredible stock. You look at Broadcom, that makes sense,
that
right?
One we know, right?
They've been long chips, but then they moved into the enterprise supply business for chips and cloud computing, and that's where the money is, and that's where the margins are. It's done very well there over a number of years.
Looks like a variety of sectors, too, on there, right?
Right. When you look back at the past decade, you're looking at Abiomed, right?
Yeah.
Very surprising biotech company, but also United Rentals. And United Rentals is not just the moving vans that move people across the country, but it's the renting of heavy gear that you don't want to buy if you're a contractor, the forklift, the backhoe,
that means
the cherry
good
picker.
Economy.
Good economy, good margins.
We figured that one out.
You and I should have been all over that. I don't know where we were.
Because this was the only decade that we went in and came out without a recession.
Right.
So, I mean,
heavy equipment was the place to be, but when you're renting it, if you own that, if you're a maker, manufacturer like a Caterpillar or a Deere, you're at risk because of the trade wars, because you have to do that long planning, long cycle inventory. But if you're renting it, you're just dealing with the margins and upgrading.
You read my mind, Caleb Silver. Okay, so let's get to the worst of the bunch. So I'm sorry for the folks that may have owned some of these stocks, but it happens.
But what it represents is really a shift in sectors, as we were talking about. I think 8 of 10 of these stocks are energy-related stocks. They're either E&P, oil, exploration, and production companies, they're refiners, or they're in the infrastructure business around that. You look at other companies like a Freeport, McMoran. That is a miner out in Phoenix, out in Arizona. They're based out in Phoenix. That and Mosaic, a miner of potash. These are materials, heavy commodities, and the rest are oil and oil services. And that just shows you how much that sector has fallen out of favor in terms of returns. There's an abundance of oil.
Are these numbers right? Because these are single digits versus...
The losses, because these are losses over the decade. This is a decade's worth of performance.
Yeah, but wasn't the other one up 3,500%?
Well, you look at
and
Netflix.
This one's down 62%.
Yeah, but this is a long cycle decline of energy stocks over the past 10 years.
That doesn't feel.
Well, we're looking at big stocks, S&P
right?
500. You want to look at smaller stocks, the declines are in those astronomical numbers. But look at these big sector stocks.
Right.
And the decline for oil and oil services stocks is not a 10-year thing. This has been over the past few years, but these are the biggest in the S&P.
Right. What I thought was interesting too was that the question now is whether or not energy will ever be a play again. Because people kept recommending energy. It was beaten down. Well, let's recommend energy. It's beaten down. And again, yesterday, I had a guest come on and push those energy stocks. and because they're beaten down, but will it ever be the same?
I don't think you're going to see that type of growth. There's still a ton of oil
Right.
to be drilled out there in the world. At the same time, the shale revolution, which was financed by very low interest rates in the U.S., has made us a net producer of oil, and gas is cheaper, and I don't see it getting more expensive, despite what we see with these geopolitical risks and the shocks like we're seeing today with Iran.
All right, let's go. We got 4 stocks in 2 minutes. So the stock of the century. One of my favorites. I don't own the stock, but I love the product.
What's amazing to me, Monster Beverage. I can't name but a couple of products within the beverage line that they produce. It's just been around for a couple of decades and done astronomically well. I can't believe that it's been the best performer of the last 20 years, but the numbers don't lie. Men lie, women lie, numbers don't. And Monster has been an absolute monster.
Right, so what is the percentage gain? Or what kind of gains are you looking at?
Oh, we're over 7,000%. For Monster Beverage.
Amazing.
But to my point, what else do they make beyond that beverage? They've been a heavily sponsored company. They're obviously involved with X Games and other activities like that.
Right.
But it's not like it's
find it on the side of a race car. All right.
Sure, but it's not like it's a pervasive product.
Right. Netflix, Broadcom, T-Mobile. I feel like we sort of hit Netflix and Broadcom a little bit. T-Mobile, you know, the question of Sprint is still there as well.
Sure.
What's the T-Mobile talk when you look at the findings there?
The findings is that it's been the discount cell phone company for years. Right now it's trying to merge with Sprint and become the number 3 player. But by undercutting on price and expanding its volume, the stock has done very well. They've used a lot of debt as well. But the CEO, John Legere, has done a hell of a job promoting the company, and also the stock price over the last 10 years has done pretty well by its investors. If the merger with Sprint goes through, we'll see if that is yet to happen. That could also be good news going forward. Could be the number 3 player.
All right, Caleb Silver, bringing us the best and the worst. We think you're the best. Thank you so much, Caleb Silver, editor-in-chief of Investopedia.